Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA rep. Take a look at these markets, doing it from a neoclassical perspective. And what does that mean? That means each night, each day, we look at price, we look at volume, we look at areas of significance on the chart. We measure them up, we ask ourselves, what happened today, and what does it tell us about the coming ones? I do a show 4 times a week, every Monday through Thursdays, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube and is under the channel LA Little. The model you see me do, or that you see me follow, is a model that I created way back in 2006, 2007. Served me extremely well during the crash, made money during the crash actually, when most people lost 40-50% of their portfolio. Has also served me reasonably well on the way back up. I haven't always been right, but there have been chances or times where it made sense to get safe. That's what we did. And we'll continue to do that because that is what you do. You protect the backside, right? And you make as much money as you can as the market goes up. You're not going to outperform the market usually on the way up. That's not the issue. If you make as much or close to as much or maybe a little bit more, great. Just don't give it back because the market eventually will. Let's take a look at the market and look at the numbers here. We had a day of down. The Russell ended up slightly. Everything else was down. We had Apple with a lawsuit over in the EU thinking that they can pull $13 billion out of that company. Good luck on that. I suspect that is going to meet with some resistance. But anyway, that was a ruling that put some pressure on technology stocks. Elsewhere, flat, right? What else would you expect now? We've been grinding sideways for 2 months. That isn't going to change overnight. We will get a point where we do want to sell off, but right now it's not happening. Look overseas. The dollar was a little bit weaker yesterday. We got an overseas bounce as a result of that. You actually had a press up in the DAX and the CACs today as the dollar got motoring higher. Gold sells off big, silver as well, all same thing, bonds as well. Dollar higher, those things go lower, kind of working in tandem. Let's look at the charts here. Let's pull up the S&P 500 daily. Another inside day, 2 in a row. Volume expands a little bit today. People are going to look at that as, a negative. Folks, it doesn't matter. It's still a range trade. At some point it will matter, but right now, you can't read things into this until we get a break, right? Until this gives it up. It's a range, and it's been a range for almost a month there. And if you go back over here, it was a range about a month over there. Is it going to roll over and break down? Well, it's possible, but it's just as possible that this thing has gone sideways long enough to where it takes another shot up. I mean, I don't know what it's going to do. You don't know what it's going to do. All we know is that so far it hasn't done anything wrong, and every time it wants to sell off, there's somebody there to buy it. NASDAQ, that's where a little bit of the pressure was today. Let's look at that one. Not an inside day. That one actually did trade down, but it's inside the bar back here. Still not enough information to suggest anything other than a range. You got the same sort of range here. I mean, you can draw these things out. They're pretty much well defined. They're sitting there. They're not giving it up. INDX, let's look at that one, see what that one looks like. Pretty much the same. Still inside that bar from Friday, which was the employment number. And you got this little gap up over here. The top of that bar was 4749. We traded down to 4760. Range trade, folks. Nothing different. Let's look at the Russell. Now, the Russell outperformed all day today. Didn't want to give it up. And Russell does a little doji, a little bit higher. Not much there. Let's pull over, take a look at, and I didn't do this, well, I guess I did actually. I didn't go through all of them, but I didn't get a chance today to go through these, so I'm going to flip through these real quick with you. IYT, a little bump up today. IYR, real estate. Let's see what that one did. Another long tail on that one, so again, kind of positive. The home builders. You would think they would go down, but they don't want to go down, even with interest rates going up. Technology. Now, technology, biotech is struggling. Had 2 big days down, right? And it's just hanging there. That's starting to become kind of negative, right? You can't get back in and retest on that bearish breakdown. In other words, we're looking at this swing point low. That's your bearish retest regen as it comes back. That price point was 288.01. We got to 28. Oh, so we retested and trying to regenerate immediately. That is kind of bearish. So, and I had someone ask me about this not that long ago, and I'm sure they're watching, so I want to give them information. So, yeah, I mean, we could test down there again. It could test the bottom of this bar again, 278.90. I had a suspicion that it wasn't going to give it up yet, but you know, as time goes by, the chance of it giving it up becomes greater and greater if it can't lift. So in general, you know, if we look at this market, there's nothing here to tell us this is going to break down. So, you know, if I had to, you know, take a shot at it and say, you know, what's going to happen, you know, in my opinion, it's going to be more of the same. You got the employment number on Friday that can shake things up, but until then, this market looks like it's comatose and going to stay that way. All right, until next time, have a great one. Thanks for joining me. Take care.